everyone, it's Shepard again from Rubik's Academy. Okay, so as per my last video, from now on I'm gonna do financial matrix analysis because I think for companies, for stocks, for equities, the most important part of the analysis process is not, I repeat, is not with the charts. At least that's what I think. Okay, I will also be writing an article to articulate why I think understanding business fundamentals is much more important than understanding charts when it comes to stocks and equities. Okay, but I can give you the short answer right now. The short answer is very simple. When you look at the chart, that is market sentiment. That is what the market thinks each share of the company is worth. Whether you see trend lines, whether you use GMMA, whether you use stochastics, whether you use relative strength indexes, whether you use fractals, whatever technical indicators you use, it doesn't matter. Because at the end of the day, those indicators, whether they are predictive, lagging, or current indicators, they all just point to market sentiment, what the market thinks the value should be and not what the value is. As an equity investor, you must differentiate and distinguish between the two. You need to understand the value of the company and not what the market thinks the value is. Because what the market thinks is influenced by 10,000 other factors other than the real value. They could be influenced by news, they could be influenced by geopolitics, they could be influenced by rumors, they could be influenced by other speculators, they could be influenced by politics. So many other factors affect how the market thinks, and because of that, they really do not see the real value of the company. All right. So without further ado, let's go into today's companies. We are looking at 3M versus Honeywell. All right. These are two rival companies. Of course, they are not totally similar in nature, but they are close enough. Okay. So let's go. All right, so just in case you're wondering what does 3M do, okay, just Google 3M. 3M has so many products, all right? They have so many products, they do so many things, but mostly 3M deals with science, all right, or in physical product manufacturing, all right? So they have products for business, okay, they deal from abrasives all the wire and cable, energy, healthcare. They do so many things, all right? But they mainly deal with scientific products. That means products they are made for different manufacturing industries, tools they are made for different manufacturing industries, okay, and the end consumer good. So they help the industries make their consumer goods, and 3M also makes consumer goods. So they are huge, okay? They are end to end. They dominate the entire supply chain. Honeywell, on the other hand, okay, if you look at the industries, they are similar to 3M, but later you will see that, of course, Honeywell is a slightly smaller company. Okay, they also produce manufacturing goods, that means manufacturing tools for businesses, for the businesses to manufacture consumer goods. They themselves also manufacture consumer. They are not so focused on consumer goods, okay? But these are the two closest local peers that I can find, all right? So without further ado, let's go right into the data. Okay, first of all, I want to look at, no, this is not what I look at. Again, this is market sentiment. Do not look at this, okay? We want to look at the real value of the company, okay? So Piotrowski F score is 5. Now that's pretty low because the maximum score is 9, okay? Piotrowski F score measures a company's financial strength, okay? But the indicators that they use, the matrix that they use are slightly different. Now, if you want to know what they use, simple, right? Just Google. There you are. Okay. So this is what they calculate. Okay. They basically measure three things: profitability, leverage, and operating efficiency. So added together, they are trying to see if a company, while conducting business, how much money they make, how well they use that money, how fast they make that money, how effectively they make that money, at what cost, and at the same time, they want to measure how much money the company has borrowed. That's why they have leverage, because they need to know how much money or how much debt the company has. Okay, so in terms of Piotrowski F score, 3M is not the best. Okay, but of course we cannot just look at one indicator. Now, if you look at EPS, earnings per share, it's $7.94. All right, $7.94. You scroll down. That's all I'm interested for this page. And then now we look at Honeywell. Honeywell earnings per share is $8.75. It's slightly lower than 3M. Okay? In case you don't know what's earnings per share, here's a revision. Earnings per share is basically after the company has deducted away all operating expenses, month on month, or at least quarter on quarter, what is the net earnings divided by the total number of outstanding shares. Okay, outstanding shares means includes restricted shares, but it's lesser than total number of authorized shares. Lesser or the same. Okay, so if it's the same, it means the company has already issued all possible shares. Okay, so you can see that earnings per share lower, but Honeywell has a slightly higher Piotrowski F score. So that could mean that Honeywell has less debt. That's why overall the Piotrowski F score for Honeywell is slightly higher. Okay, or it could also mean that although Honeywell has less profitability, but it scores well for leverage and operating efficiency. That's why the overall score is still higher than 3M. All right, that is all I'm interested. Okay, so let's go back to 3M. So now we are going into the financials, all right? We want to look at gross profit. Gross profit is 15 million times 1,000, 15,000 million, which is 15B. Okay, so 3M gross profit is 15.3 billion based on last quarter, based on March 2020. The next quarter, which is June, is coming out soon. All right, quarterly earnings is coming out soon. It's expected to drop. No, for 3M, it's expected to go up. Okay, because the business is less affected because of the pandemic, because they manufacture masks, PPEs, they do all that. So the pandemic has actually boosted the demand for such goods, although the demand of other consumer goods may have dropped. All right, so 15B. So you can see that actually, if you compare, okay, 3M is really barely affected by the pandemic. 15.3B, actually it did better. It did better in compared to last quarter. Okay, they made 74 more million. 68 more million dollars compared to last quarter. I mean, it's not a big difference, but it's still a positive difference, which is why 3M is one of the companies whereby it is not that affected by the pandemic, not that affected by COVID-19. The gross profits remain roughly the same. Okay. Next, we look at net earnings. Okay, if you look at net earnings after deducting all operation expenses, all right, 4.9 billion, all right, 4.9 billion, okay, 4,000, yeah. 4.9 billion is net earnings. Again, it is higher than last quarter. It's higher by about 400 million. Okay, it's higher by about 400 million, which is fantastic. Okay, fantastic. It's higher by 401 million to be exact. Okay, higher as compared to last quarter by 401 million. So 3M is a stable company. 3M has proved to us that its range of products, the sheer amount of product range, has actually managed to hedge it against the pandemic. It has successfully hedged itself against the COVID-19 pandemic, which is excellent. All right. Now let's go on. The next thing that I want to find out is net asset value. All right. So what is net asset value? All right. Net asset value is the total amount of net worth of the company divided by the total amount of outstanding shares. It's whenever you see per share, it's always divided by the total number of outstanding shares. I hope I don't have to repeat this in this video. All right. Whenever you see per share, it's always divided by the total amount of outstanding shares, and that includes restricted shares. All right. So this matrix attempts to examine the intrinsic value of the company. So every company has an intrinsic value and an extrinsic value. The intrinsic value is basically the company's database, its assets, its standing inventory, its manufacturing capabilities. Those things make up a company's intrinsic value. Extrinsic value is how much sales it can make, how effective its marketing is, how much market share it has, what is the market price of the shares. These are extrinsic value indicators. The former are intrinsic value indicators. Okay? So this is intrinsic value. Now, the intrinsic value, in my view, is more important than the extrinsic value, because the extrinsic value, such as the share price, is easily influenced by external events. Okay? However, ultimately, if a company has good, positive, strong intrinsic value, the extrinsic value may drop for a while, but it will eventually bounce back. Okay, you can see these in big companies like Coca-Cola, Walmart, all these, their share prices fluctuate over time, but because of the sheer intrinsic value and the growth projection and the earnings projection of the company, all right, especially between 1980s to 2000s, all right, it has managed to grow, and the extrinsic value has managed to break new highs. All right. So if you look at this, the intrinsic value per share of 3M is $17.64. The net asset value per share of 3M is $17.64. Is that good? Is that bad? All I can say is that it's stable. All right, because if you look across the board between March 2020 to December 2017, it has remained largely the same. It dropped a little bit, probably because of the fact that 3M is expanding aggressively. Okay, but the amount has roughly stayed the same, especially if you look at it compared to the last quarter. In fact, it's slightly higher, but it stayed almost the same. And if you look at these 4 bars over here, okay, these are mini bars. All right, so you can see that when the mini bars are positive and blue and almost of the same height, it means that the companies for that matrix is almost the same for when they measure it against historical trends. All right. Then this is the net tangible asset per share. What is the difference, if you ask me? Okay, the difference is that it gives you the net worth of the company in the event of liquidation. Okay. One is book value. Net asset value is book value. And it measures total assets. Tangible assets only measure tangible assets. So if you ask me which is a better indicator, it depends on the industry. But most of the time, I look at net asset value. Okay, especially for new age companies where data plays a huge part, where data valuation plays a huge part. You cannot just look at tangible asset. Okay, you have to look at total asset. All right. So of course, tangible asset for 3M is negative, okay? Negative 16 in terms of based on number of shares. Why is it negative? All right, it's negative when they compare it to the first value that they derive. So anything that has dropped, they look at it as negative, okay? Or it could be because of tangible asset depreciation. When tangible assets upon purchase will depreciate over time. And that is why the value of the tangible asset drops. And sometimes it results in a negative value for net tangible asset per share. That's why I say it's not accurate. I prefer net asset value. Okay, so let's go on to the next one. Let's go on to Honeywell's. Every time I switch a company, I have to reload everything. So that's why it's a bit irritating. Just bear with me, I'm sorry. Okay, let me try and use this one. M. Scroll down, Honeywell. Okay, good. I'm finally on Honeywell. Now let's go on to financials. Okay, finally I'm here. All right, so we are at the financials page. As usual, we will scroll to the gross profit first. So gross profit is actually about 12 billion. All right, it's about 12 billion. If you compare it to 3M, it's definitely not as good. Okay, they only allow you to reflect one. All right, so if you remember, 3M was much higher than this. It's about 15 billion. All right, so it's not as high as 3M in terms of gross profit, but it managed to secure a higher Piotrowski F score. So it must be the operating efficiency and it must be a leverage. Okay, later we'll check it out. Okay, and net earnings, of course, is less than 3M as well. It's about 6 billion. All right, 6 billion. Okay. And then if you look at net asset value, but the net asset value is higher than 3M. Net asset value for Honeywell is about $25, which is a whopping almost 2 times as high as 3M. Okay? This gives us, what does this mean? This means that the intrinsic value of Honeywell could be higher than 3M. The intrinsic value of the company. All right, because net asset value measures the intrinsic value of the company. That's why Honeywell could be a lot higher than 3M in terms of intrinsic value. Okay, 2 times as high actually. And you can see the bars here are even more uniform. Okay, the bars here are even more uniform as compared to 3M. Okay, which means the price trend in terms of net asset value for Honeywell is much higher than 3M. Also, if you look at net tangible asset value, you can see that it's negative as well because of capital asset depreciation, but the negative is a lot less than 3M. Okay, so although 3M may have the highest market cap, but in terms of intrinsic value, just based on this matrix that I'm looking at, Honeywell may be a stronger company. All right, it may be a stronger company. Okay, so that's it for me today. All right, I apologize for the small little lag in between because of the website. I promise to sort of improve on that in the future videos. All right, thank you very much. My name is Jefford. I hope to see you again in the next video. Thank you.